Hello, everybody. So today I want to talk about Celcius. Celcius is a stock that I covered in the very early days on the channel. I had taken a position, took some nice profits, sold the stock to move the money into better opportunities at the time. But I've kept track of Celcius because I live in the US and I can't help to see every time I go to a store, the beverage section, I go to like the little Buc-ee's, a 200 pump convenience store in Texas near me, and I see a giant aisle, and all there is Celcius. And you have teenagers, you have adults, women, men, old, young. They just go ahead and they just buy a bunch of Celcius. Right, you go to Costco, you see people buying giant 24 packs of Celcius. Celcius is a crazy growth phenomenon in the US. And, as a growth investor, kind of a, self-described growth snob, I love growth. I feel bad not owning a stock that grows this fast, right? The stock is predicted to grow at 80% per 79.26, 80% per Seeking Alpha forward growth. There's only about 5 stocks that I can think of right now in my coverage that grow at roughly 80 to 100%. There's only 5. These are very special companies that are able to grow that fast, right? It will be a while, in my view, before a company like Celcius gets below my 30% revenue growth threshold. So these companies are special. Companies that grow this fast are special. And if you live in the US, you've likely noticed this beverage. It is everywhere. And so I cannot explain why this stock is down 25% in 2.5 months, as I see this product just as often out of stock as it used to be in the earlier days and during the events of 2020, if you remember, which is when this beverage really got started. I buy Celcius once in a while. Actually, I think it's not a bad beverage. I think it tastes pretty good. Tastes better than a Monster, if you ask me. And so, when I see a stock like a Celcius is down 25%, okay, that's fine. But if you look the full year, it's only up 50%. Right? There's plenty of stocks in my coverage universe that are up above 100% in that 1 year period. Celsius is only up 50%. And I think it's inherently unfair because if you look at the year-over-year revenue growth, so the trailing 12-month revenue growth for Celsius, they grew revenue at 98%. Yet the stock only grew 50%. And that stock has been GAAP profitable all along. So there is some multiple compression happening for this stock, and I think the later leg of the drop has something to do with the market not understanding stock splits and thinking something bad because of a stock split. The market's rationality abounds as always, but in my view, that stock right now is twice as cheap as it was a year ago because revenue nearly doubled, but the stock only went up 50%. And so when I look at revenue, and by the way, Macro Trends has not updated their Q3 yet. I don't know what they're waiting for. They haven't updated it yet. But if you just look from Q2 2023 to Q2 2022, you had about a doubling in their sales, right? And right now their sales are at a little more than 1,100. What are they? 1149. They're at 1149. So right now their sales would be right here. So the growth has not abated. The growth has not continued. And if you go to Macro Trends, which is what I use typically to look at my price to sales ratio over time, there's plenty of other tools. I just use the free tools, but you can use any tool you want. The price to sales ratio has been pretty stagnant since 2002. But actually, if you were to update with the latest number, you would be at the lowest price to sales ratio since the beginning of 2020 for this stock. I mean, you'd be the equivalent of a Q2 price to sales ratio. Q2 2020, you'd get back at a Q2 price to sales ratio, the same level. So this stock is getting cheap and cheap and cheap on a price to sales ratio right now, and I'm getting interested. I'm getting interested. That's why I titled this video, Should I Buy? So when I input this company in my spreadsheet, it's back in my spreadsheet, I remember calculating this stock at nosebleed valuations in the early days of a channel where I was getting close to a 1. Now, when I calculate it again and I input everything in my spreadsheet, I'm getting a 0.28. To give you an idea, a Tesla is a 0.7. So it's crazy to think that this stock, which is widely regarded as overvalued, is actually, in my view, much cheaper than a Tesla. Briefly, if you're new to the channel, that spreadsheet is what? Is enterprise value over gross profit over revenue growth. What it means is I'm asking the question, how much am I paying for each percentage point of forward revenue growth? How much am I paying for that growth? Celcius is not dirt cheap, but it is definitely in the first quartile of all of the cheap stocks that I covered. It is in the lower bottom. And, if this stock, in my view, if it drops another 10-15%, it will become a very compelling buy in the way that I look at it. It's definitely not the most expensive company, and not expensive right now, again, with the lens that I normally use to look at stocks. And when I analyze this company, first of all, the beverage business, I have no exposure whatsoever. It's really, it's tough for a growth investor to get exposed to a quote-unquote legacy company like beverages, but there's a lot of advantages of buying something like a lifestyle brand like a Celcius. It's what I call a lifestyle brand. There's a lot of benefits to buying a company like that, like Celcius. One of them is, obviously, this is a recession-proof product, right? This is a $1.98 at the convenience store, and if you buy it in bulk, you're at about $1 a can if you buy it in bulk. So it's a recession-proof product, which is great right now because there's still a bunch of the market that has recession fears. Even though I think we've been in a recession for a long time, a lot of the market is like wanting to look these recession-proof stocks. So this is a stock that can do very well in a recession. That's one aspect of it. The other aspect of it on the face of it is if you look at the Pepsis and the Coca-Cola of the world, of course, the basis of the business model is caffeine, right? Caffeine has you come back. That's the whole point. That's the beauty of this business model, right? If you don't have your caffeine daily, you get a headache, right? And so that's what Celcius has, a lot of caffeine, and because of that, people need to come back and get more caffeine. And as they get more caffeine, they get more focus, and they can go about their day or their workout or their job, etc., etc., etc. I'm actually mostly a coffee drinker, and I don't have a problem with caffeine intake. A lot of substances I would think are problematic, but caffeine intakes, I have no problem with that. Anyways, the point is, why do I like Celcius? Well, there's a few things that I like about Celcius. First of all, Monster. So I just went back 10 years, and the performance for Monster is not very good. If you go back 10 years, it's only 19.21%, so only 5% more than the Nasdaq. It's outstanding, right? It's really, really good. But if you go on over a longer range, you get much better long-term performance for a company like Celcius. I think a lot of the growth of Monster has been hindered by, the past 4 years competition from Celcius. Monster has been hindered by Celcius. There's no doubt in my mind that they have. No doubt. But if you look at this growth, look at how steady it is. Like that's a sleep well at night type of stock, this Monster beverage, right? It's a sleep well at night stock. So I like the consistent growth. But when I do a qualitative analysis of Celcius and I start thinking about this product, there's a lot of things that I like better about Celcius than, say, a Monster beverage. Or to a lesser extent, a Pepsi with their Pepsi Max and all of that. And by the way, Celsius has a distribution partnership with Pepsi. Let me tell you what I like the most. So of course, Monster and Red Bull, they are for everyone, but they're marketed heavily, I would argue, to more quote-unquote hardcore sports folks, people, a little more extreme sports. So I would argue that it's not explicitly targeted at both genders. Red Bull and Monster are not targeted at both genders. When you look at Celsius, they are really targeting both genders, and I love that very much because all of a sudden you double your market size when you target a beverage to both genders. You're doubling your market size, right? Red Bull, jumping out of a plane at 40,000 feet in a balloon or doing all these extreme sports. I don't think you're targeting to as broad of a set of customers as a Celcius does. The same is true for age. Celcius is advertising to all sorts of ages. Red Bull, I'm not so sure. I think these two beverage companies, which are the main competitors of Celcius, have a very narrow customer target, and I like that Celcius having that broader target. So that's one thing that gives me a lot of hope for Celcius. Then there's Europe. I was in France in August visiting family. I saw no Celcius whatsoever over there, and they're nowhere to be seen. At least where I've been to in Europe, they are nowhere to be seen. But Monster is everywhere over there, and Red Bull is everywhere over there. There's Monster everywhere. You can get Monster everywhere in Europe. So why is Monster there and Celcius is not there? I think it's just a matter of time. I think Celcius is going to bring the competition on internationally like they are in the US, right? Another thing that I like about Celcius, it can be consumed at any time of the day, and it's not weird to have Celcius in the morning. In fact, if you go on a road trip, you go to gas stations in the morning, you'll see people buy Celcius in place of coffee, right? You see fewer people buying a Monster at 6 a.m. in the morning. Fewer, right? It's got a little bit of a crazier connotation, I would argue, or more hardcore is the right term. And then Celcius rides on the health wave or the health trend, and they tell you about how they have vitamins and they burn body fat and they have all of that stuff. And of course, these are personal preferences. One may like the beverage, one may hate the beverage. Clearly, it's a product that's easy enough to try. And I guess if you try the product and you hate the product, that's an easy way to eliminate that stock and just not think about it because you don't like the product. But I like this product. I think this is a very, very interesting product, interesting play, and I would love to jump back into this stock if it went down another 10%. So I'm tracking it closely, and again, I think it's unfair. I think it's being unfairly punished. The price to sales should have held. The stock is only up 50% in 1 year, but revenue is up 100% in 1 year. Over time, over the long run, revenue and stock price, business success and stock price closely track each other. I would argue the stock price is a little bit behind right now. So this was not investment advice. This is just entertainment. I appreciate your likes. I appreciate you subscribing to my channel. Thank you for watching, and have a wonderful day.